Welcome to the VantagePoint series, Getting the Most Out of VantagePoint Indicators, the Predicted Moving Averages. The predicted moving averages in VantagePoint allow you to use traditional moving average techniques, the crossovers and the other types of things that you would normally use with moving averages. Secondly, we're looking at the possibility of matching a different time frame to your trading style. You have several different choices in VantagePoint. Third, the turns in the predicted moving average tend to come before the actual moving average, which is something that you would expect when you are looking at moving averages of different lengths. But in the case of VantagePoint, the key advantage is we are using data based on intermarket analysis, and we're using typical prices instead of closes. So that gives you a little bit of an edge in terms of being able to position yourself using the moving averages. And fourth, a way to look at the moving average is that it helps confirm the trend direction once you see other signals coming together on your chart. Like other indicators, you do not use this in isolation, but in conjunction with other indicators. This is the predicted moving average, the medium-term moving average, the blue line. The black line is the predicted medium-term actual moving average, the 4-day predicted, 10-day actual. What you're looking at here is, first of all, the angle at which the blue line, we'll say that for the predicted moving average just for sake of convenience, the predicted moving average is dependent on that angle. Is it moving up? Is it moving down? Is it moving sideways? That's one of the first clues, one of the first alerts that you have that a change in trend could be forthcoming. A second thing that you want to look at, and this is a visual thing that we'll talk about more in the session on the predicted differences, but kind of a visual look at the distance between the two moving averages. Is it gaining or decreasing? That tells you something about the momentum that the market is experiencing. The key of the moving average technique, as it is with other moving average techniques, however, is the crossover. As you will notice on the screen, you can see there are some occasions here where you have the blue line moving above the black line, but notice down here a bar earlier that it started to turn a day before the actual moving average started to turn. And you'll see that throughout. There are some times when it will cut down here where you could have taken a short-term trade. You'll see other times when that signal may not necessarily be the correct one, but it is a signal that you can use in conjunction with other VantagePoint indicators to determine where to be in and where to be out. Now you can take a look at different time frames. I'll just show this on a 3-month, and this just gives you a different view. I tend in a situation with moving averages to look at the longer time frame because I want to know where it is hidden in a historical perspective. The other thing you can do, when I go to properties, I can change my time frame into short-term crossover situations with the shorter moving average, predicted moving average, being a little more volatile, a little more up and down than you would see with the predicted medium-term moving average. Or I can go into a situation here where I look at longer term, and sometimes you might want to look at the longer term because you want to get rid of some of those up and down violent movements. The longer term moving average will tend to smooth that out, and your crossover will be more consistent with trading long term. Another factor you can do with the predicted moving average is to look at the situations where the price tends to kind of bounce back to that line and it acts as support. Where prices comes down, you could place a potential limit order at that or near that predicted moving average, and as it moves up, ride the market up. It acts in this case just like support, just like resistance, depending upon the direction of the market. There are other little things that you can see if you would like to look at the predicted medium-term crossover. And that is, I like to look at some of the little gyrations. As you can see up here, we have a small M type formation. If you're familiar with traditional technical analysis, M formations on the top, W formations on the bottom are good signals that there may be a trend change. It does a little bounce, a little adjustment. When it drops below this low point here of the M, that suggests in a good possible spot to go short. In this case, it coincides with the crossover, which is another good signal. Again, as with other indicators, the predicted moving averages cannot be used in isolation because they tend to move a little quickly, and then they will turn, and when they do turn, the confirmation may come a little later than you would get with some of the indicators. So you need to put all the indicators together in one package to get your actual trading signal. Now let's confirm some of the key points using the predicted moving averages from VantagePoint. First, many different time frames are possible. They can be short-term, long-term, medium-term is probably the most useful, but you can adjust it to your trading style. Secondly, what is really nice about that is that VantagePoint has determined the best moving average length combinations using neural network technology. You don't have to test every possible combination yourself. The main advantage you get with VantagePoint is that a change in angle in the predicted moving average can be an early alert that there is going to be a possible trend change. And then VantagePoint's predicted moving averages, when they have a crossover, when the blue line goes above the black line in the example shown, confirms a possible trend reversal. Thank you for watching this session. Please visit the Market Technologies Learning Center for additional tutorials.